Hey folks, so we continue to be in what we think is a very bullish market environment here for risk assets. That's not to say that we can't get near-term durations of pullbacks and sort of consolidation periods, but really wanted to just take a minute and give you an update on some of the things that we like. So there's I think 2 ETFs, so 2 sectors, and 4 or 5 individual equities. So let's have a look at this real quick. First of all is a sector that we've been talking about now for some time. This is the energy sector. The ticker symbol is XLE. And what we like about this is really the reflation idea, the fact that we're likely going to have somewhat higher inflation and somewhat better growth. And if you look at the XLE ETF, you can see we've broken above that red line at 2-day moving average. And these are just the optics, right? You have to have the structural, or at least to some extent fundamental analysis, right, in order for the optics to make sense as well. But you can see we kind of put in a higher low there in October versus the lows in March, and we do think there's plenty of upside here through the lens of the next 3 to 6 months or thereabouts. So that's energy. Somewhat closely related to this, and I say somewhat is because I think a lot of people mix them up, is the material sector. Now, the material sector always says is a very broad sector, and you can see we had a very, very notable breakout above a multi-year consolidation period start to take place this August. Now, again, we may be somewhat overbought here near term, but if we look at this a bit closer, you can see that it is working rather orderly. So we've had a breakout, a check back to previous breakout, a rally, and now we've once again paused for the past 4 weeks or so, for the past month or so. This is a bit more near term, but again, it does look quite constructive. I'll show you the daily chart on the Xlb Etf. That's what this is, Xlb material stocks, and you can see we've been consolidating now, and it looks like we could push higher again in the not too distant future. So those are 2 sectors. Let's look at some individual equities. And I'll start off with what one of my favorites might be, which does not mean that this has to work out, but I'll give you this one here first of all on the weekly chart. This is a company called Weyerhaeuser. This is essentially, they essentially operate within a REIT, a real estate investment trust, but it's really like a timber and forestry kind of company. And you can see the optics here, very bullish inverse head and shoulders pattern. We just starting to break out here as I'm recording this. And we think there's plenty of upside here, maybe back into the mid to high 30s over time. Should not be a difficult thing to accomplish at all. The chart is backed up by again, continued bullish housing situations, more suburbanization taking place, people buying homes, and quite frankly, the company's doing a whole bunch of land deals, which is also interesting. So that's a Weyerhaeuser company, and here's a more near-term visual aspect of this. Again, mid to high 30s should not be that difficult to accomplish. Let's go through 2 more. One of them is actually 2 of them. These are both in the healthcare sector, and I think I'll stick to those. One of them is Tenet Healthcare, THC. If you look at Tenet Healthcare, you can also look at something like HCA. There are hospital operators, among other things. The charts here doesn't look all that interesting, but there's a lot of pent-up demand for surgeries, where something like Tenet Healthcare, the hospitals, and also the next stock I'll talk about can really come in. So because of COVID, a lot of people have postponing their surgeries or not even going to the doctor. Understandably so, of course, but we do think Tenet Healthcare really has plenty of upside, maybe into $40 or so in the not too distant future will kind of be our take on that. Very similar and related is a company called AMN, which is AMN Healthcare. First of all, if you and this is they do staffing and all sorts of things around healthcare. So here too, we think again with once we were going through COVID at the end of it here, which it seems to be like that's what the consensus is right now, you're going to see a lot more people going to get surgeries and things done. That should benefit these kind of companies. You can see AMN here. For the most part, the stock hasn't done anything since 2018. We've been consolidating, but now it looks like we're coiling up really at the upper end of this range, and I think we could see a more sustainable breakout into the mid to high 70s. Would not be that difficult a feat to accomplish, in my opinion. Here's the more near-term chart, the daily chart. You can see the coiling up, the sort of base we're building, and it looks like the stock does want to go higher into those mid to high 70s. And lastly, last but not least, I just want to quickly touch on a couple of financial stocks, JP Morgan and Morgan Stanley. I'll just quickly go to Morgan Stanley, and we'll wrap up on this one. But the longer term chart of Morgan Stanley is one where the stock has essentially done absolutely nothing for the past decade. And this is a monthly chart. This is a really, really long-term chart. But we do think that some of these investment banking outfits and related do have what it takes to really claw back to at least where they were in 07 for Morgan Stanley. So we're talking about a stock that could rise from the current mid-40s into the, let's call it the mid to potentially high 70s. So a lot of bullish things, folks. I hope this makes sense. If you have any questions, let us know. And we'll see you soon.